Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So what I want to cover off today is the housing turbulence that we're experiencing. People are talking about the housing market pulling back, and I wanted to put it into perspective, but I also wanted to demonstrate how you can just use charts to get a feel for what's going on in the industry. You don't need to phone somebody. You could just use a chart, and it's probably going to tell you pretty much what you need to know. So let's jump into it. So the Nasdaq market's drifting lower. We're going to cover that off chart-wise, and then housing looks very weak. But what I want to also talk about is how to dissect this industry and break it down into different components. So we could talk about the actual Homebuilders Index, and we could talk about lumber, and we could talk about mortgage finance and all that kind of stuff. There's a lot of different ways to look across the industry. And so what I hope to do with the presentation today is just give you an idea of how you can use charts to investigate an industry, even before you, if you're a fundamental investor, wanted to break into the charts or break into the companies and just see what's going on inside the companies. The chart's telling you more what you need to know than actually getting into the financials. And then if you want to go into the financials after that, be my guest. But I think you'll find that the charts can do a great job of helping you. And also, if you'd like to check out ospreystrategic.org, I'd encourage you to head over to the website and just check out some of the things we've done lately. So if you were looking for a long market call in June 17th, we sent out an email saying that selling was exhausted and that we were looking for the market to turn higher. And then in August 19th, the email went out saying a fuse is lit. In other words, the bomb is about to go off and the market pulled back. So the idea being, we'd like to try and help you with understanding when to get in the market and out of the market. And late June and early July was just choppy back and forth, and that's a very difficult market for every system. I will say that it was difficult for me as well, but the July period that rallied up really, really hard worked out great. So if you'd like to get a more direct look at what we do at Osprey Strategic, we're going to hold a presentation on September the 20th, and I'll lay all of that out to Market Buzz watchers next week to show you what we've got in store. And if you're interested, I'd be more than happy to work through the charts with you and show you what we do. So think about that. Anyway, you can always try 1 month at $7, but I think the more important part is getting a feel for the cycle both ways, in and out, and then waiting for the next cycle to start. That might help you. So with that, let's jump over into the charts. I want to talk about the Nasdaq briefly. And what you see here, this chart was in an article I published on Friday, and the article was about the mortgage market and how we've got this not the mortgage market, the stock market, and how we've got inflation coming at us in a pretty big way. But here's just a simple thing. I've set a zigzag indicator on the chart, and this is at 13%. What you see is from October 2021 to the high of the market in November, we never had a 13% pullback. And why did I do that? Well, this 13% pullback was when we had made our high to our low, so I just picked that. But again, you can see that this year we've already had two significant waves of at least 13% multiple directions. So a down 13%, at least 13% up, at least 13% down, 13% up, and 13% down. No wonder it's a harder investing environment. And if I change the setting on this, so this is zigzag, and I just change it to, let's say, 9%. Well, then what you'll see is you'll notice that we had a lot more, and conversely, we've also had a lot more chop in this year. So if you're struggling to get the investment direction right, it's very difficult, and most people will struggle to swing fast enough to get this market trading well for them. And so you might actually make money on the swings, or you might lose a little bit on the swings. But the big idea behind what we do at Osprey Strategic is try and make sure that you're in for the up and out for the down. And so in this case, hopefully you've made some and you're sitting in a positive situation this year. Looking in on the housing market, what I wanted to talk about was the charts are starting to break down meaningfully, and we have data coming at us that's pretty severe. And what you see here is that the single family houses sold, this level here of 500 goes all the way back to 2015. So we're at the lowest level in 7 years. I also noticed that the PPO is breaking down, and when I've shown you the recession watch list, I've shown this chart a few times, but today we're going to focus in on this housing market, and this is a pretty big deal for us to have the markets breaking down. So this is homes sold, and then when we go into housing starts, this chart hasn't broken down as much. It's at 1 year lows or whatever, but the real thing is the momentum is still positive. So we're still building new houses, but the number of homes being flipped is dropping dramatically. And that's probably part of the whole conversation around mortgages. So when we go look at the Homebuilders Index, what we see here is the chart had a beautiful run up off the 2020 lows. And in November, December, does this sound familiar? The stock market made highs, as did the Homebuilders Index, and the PPO was making lower highs there. And then in mid-January, this dropped below zero, and it spent a whole bunch of time here. Well, we got a nice rally off the mid-June lows and rallied up to the mid-August highs, and you see this on a lot of charts. We've had 8 weeks of kind of running up, and now it's pulled back dramatically. And the real question is, are we ready to turn higher? And the right answer for me is not yet. But what I want to point out is some other ways to look at it. So just even if you were interested in the industry and you wanted to start working your way through, there's a whole bunch of things we could do. And here's one called the Home Builders Perf chart. And the way you would get to that is you'd go to charts and tools, and you go down here to perf charts, and you can hit predefined groups. And if you scroll down far enough, you can just see home construction in here. And so with this home construction, the idea being, is there a general trend in the industry? And I think that's pretty obvious. All of the stocks look familiar. Lowe's, Home Depot, KB Homes, DR Horton, Lennar, Toll Brothers, they're all right there. And so this chart pattern pretty much reflects what everybody's seeing in the industry. It's not like a few companies are experiencing something different than the others. Some are down 40%, some are down 20%, but I think the overall trend from 200 days ago, roughly when the market topped, actually November 18th, when you look at that, you could just see that this whole thing ran down. And so when we're trying to invest, if we're trying to invest, let's say we think Toll Brothers is going to be better than Lennar or whatever, it's very difficult here. So we might actually succeed in finding a stronger stock than one or the other, but the real problem is they're all losing ground. And so why invest in the space? And that goes back to trying to invest in a bear market. Finding something that goes up is very difficult. If you look on the chart here, sure enough, when did it bottom? If you look on the chart here, sure enough, when did it top? Same idea. And so the market is a difficult beast to get your hands around because there's so many moving parts. But the big issue here is home builders are in trouble. And when we look at this housing starts number, this is starting to break down. This goes back to July 29th. So we're about to get the next one, which would be the August reading. And again, when you're falling below the 40-week moving average, that's pretty severe. In 2018, we briefly dipped below it. In 2020, with the COVID dip, we definitely dipped below it. And now we sit just below this. You can see back in 06, 07, we had the same sort of positioning where we got here and then we wiggled briefly and then we fell apart. Well, we did that in 2000 as well. So we're definitely in the cautionary zone for housing starts. And I think it's one of those things that we really need to be aware of. Now, Again, there's many pieces to the housing business. And one example of, if we just wanted to take these home builders, looking at the XHB, this is a weekly chart, obviously, but look at our PPO. It's below zero. Do we really want to be investing in January when something's dropping? Now, here the potential is for a higher low, so we could come up here, make a higher low, but we'd also want to see the price not only flatten out, but actually start to turn up. We haven't seen that yet, so there's no real reason to jump into it. The RSI also gives us some clues up here, and again, when you're in a bull market, the RSI stays above 40, okay, on a weekly chart, and then we put the green line there. Maybe I'll just make that a solid line. And then when we're in a bear market, it goes down and it touches 30, like it did here, and that just tells you, you're still in a problematic market. We have trouble getting above 60 in a bear market, so we're going to make that red. And the idea being that you would oscillate above and below that. Now, when this starts to change trend and all of a sudden this goes back up to 70, that's telling us that we've probably, we're back in bull market mode. So we'd want to stay aware of that change. And I'll just save that chart. We just want to be aware of that change. Now, as an example, when I unwind the tape here, I just want to go back 15 years or something. What you'll see here is the RSI goes through huge periods of outperformance, right, up in the top half. And even if you just use the 50 line, it gives you an idea. But in 2018, really never got above 50, telling you to be cautious. Then in 2019, it started to take off back above 50. That was pretty bullish. So these are just simple clues that we can use as technicians to see what's going on in the market. When we scroll down and look at the PPO, you'll notice that spending a long time below zero is not a good part for this. And currently, where are we? We're well below zero. We're rolling over below zero. So we don't have any sort of uptrend defined yet. And there's really nothing to kick us into gear here. So we haven't investigated any financials in the companies at all. We haven't done any, I'll call it detailed analysis. But we can also do one more thing, and that is say, what is the general trend for the industry? And we could draw a line on here. And to me, that trend line is still holding. Now we can be more aggressive and just, I'll call it, tighten it up a little bit and maybe miss this 1 or 2 weeks where it held down here and go up here. We're getting to the extreme level of this, and as long as this stays above this big trend line, if it came down to test that trend line again, that's probably a good place to look to get long. And then the other thing I would put on here is a downsloping trend line in momentum, and if that could break to the upside, I'd be more interested. Back in 2007, 2008, it was pretty choppy. There was one trend line here. There might have been a trend line over here, if you will. And these rallies were vicious both ways, all the way up. But you're watching for some sort of trend change, and I would say even in here, when this starts to revert, and maybe we draw it out to here, but you can finally see that the market is no longer below zero here in momentum, and it actually starts to thrust higher in early 2017. And that was a really nice solid year that went up for a long period of time. And the other thing the PPO momentum tells us is we got into a higher area than we had been in the last 15 years. So a little bit effervescent, right? A little bit too much enthusiasm. And so now the market has sold that off. My main point here is even before you want to go in and do some forensic accounting to see if there's some bargains out there in companies, the chart's telling you a lot of things probably that we're not there yet. And when we start to get there, and whether you want to use a 1-year trend line like this or a shorter trend line like this to help you pick your lows, when these downtrends break, they're at least giving you a reason to go look at the charts. And currently we haven't got that yet. So it's one of the things that I think is important to try and use the chart to give you some ammunition to start go looking. Now, if we pick XOP, and I'm just going to grab it because I know it's been a wild roller coaster, it's still in an uptrend. The PPO is still above zero, so it's still worth watching. Doesn't mean that it won't break below zero right away here and totally change tune, but you'll notice back in 2014, it totally changed its tune, went below zero late in the year, and then spent a year and a half below zero. There was really nothing to buy there. So when we look at the home builder chart and it's sitting in that sort of momentum phase, or here was the XOP back then in 2019, couldn't get positive, just kept going lower. These are big clues just telling you whether to get in or get out. And if it's below zero, it's really hard for us to justify getting in. Okay, so that's one aspect of investigating it. We've got some other things that we could do. So here's mortgage finance, and what I've done is I've set the chart to year to date, and I just went and got all of the stocks in the mortgage finance group. And when we look at these, we can either just scan to see how they're doing. But I was down visiting Tom Boley in, I want to say early April or maybe late April, and he has some friends that are in the mortgage finance business. And what he noticed was that they were starting to do layoffs and that kind of stuff. So that was way back in April. And when we look at these charts since then, and we could click on these, I could set them in sort order. It's going to sort it by the name rather than this sort order if I just watched it this way. So if I want to save it in this sort order, which is ranked by performance, I would go down to the bottom of the list and hit number in sorted order, and then that's going to allow me to look at best to worst, and then as an example just change it from here to we could do a gallery view or the chart look where we just scroll 10 or 25 per page. So what you see here is this is pretty much an uptrend, right? And this is the strongest stock in the group. And I must admit, looks pretty good. IPO'd roughly a year ago, and it's been trending higher in a pretty rough market. So this is a pretty strong stock. It would be interesting to go see exactly what they have going on. Now here's Federal Home Mortgage. Not much going on, pretty flat. Same thing, preferreds. Federal National Mortgage Association, flat, nothing really, like why invest in this, right? It's not going anywhere. And then here's America First Tax Exempt. This thing's just been chopping sideways for a year, so nothing. But we're going to get through these first few that are strong performers and then see what's happening to the rest of them. So here's Radian Group. And this was $23 a couple of weeks ago, probably August 19th is my guess. And then we pulled down to the bottom, made its low June 17th. So we see this all the time, that the indexes kind of drive the performance. And what you want to be aware of is just being in the market while it's in your favor and out of the market when it's against you. So here we are. Well, that's the way I like to think about it. So here we are dropping quickly. So this is down about 20% in 2 or 3 weeks. Not very good. Here's Fannie Mae, just sideways, nothing really to own there. This one's quite choppy. At least when it trends for a while. So this was a nice uptrend off the low and definitely a downtrend here. But the same sort of idea. You just want to watch and see what's going on in these charts. Now, I'm going to skip to the second page just to speed this up a little bit. But what you see here is these charts have been in a big downtrend, and looking at them, there's no real reason to own them, right? They've been breaking down since the beginning of the year. This was called a 575 stock, and it's a 350 stock now. Owen Financial, OCWEN Financial, started the year at the highs, dropped to the lows. This was 41 to 17, 60% pullback. Those are really big moves. And then as we get down here, here's Rocket Mortgages, and they're sponsoring golf tournaments and all that kind of stuff for advertising. This thing has just been pummeled, right? Beginning of the year, $14.50, now sitting at $7. It's cut in half. Too bad the mortgage wouldn't be cut in half, but no, it's the stock price is. And here's Home Point Capital. Literally in August, as soon as the market started to break down, this stock broke down from $3.50 to $2. That's a 40% haircut. Loan Depot, not really a trend we want to be a part of. Finance of America, look at that. That is $8.43 to $1.50. Amazing, there's a shareholder. And then Lending Tree, a very popular stock years ago. Now here we are. April made a high at $129, now sitting at $30, down roughly 80%. no real hope here for these companies yet. And so is there any real reason to start to turn it up? So that's another way to analyze it. Again, go get the whole group and just quickly look through the charts. There's a few names that stuck out there at the beginning, but for the most part, 80% of the group is falling. Do you really need to invest there? So we covered off the performance chart of just looking at the home builders and how they're trending lower. But the other thing we can do is we can go in and actually just get this sector summary. What I did was when I grabbed this group, so how do I get there? So you go to charts and tools, you go to market summary, sector summary. You go to sector summary, and then obviously I want to go into financials, and then in financials I want to go to whatever I could pick consumer finance or mortgage finance or whatever. In this case, I pick mortgage finance. So if that's what I want, that's cool. The other way to do it is to go in and just pick XLP, and then we can say edit list. And then what we would do is say, I want to create a new list, and I'm going to call it whatever, 6010 hyphen mortgage hyphen mortgage finance. And so I'm going to make that a list, and I'm going to call it 2 because I've already made one. But now when you want to add symbols, what you can do is you go in here and you say from group, then you select your US industry. I'm going to go down to financials, and I'm going to go pick mortgage finance, whatever. Let's say I wanted to go pick consumer finance. We could do that as well. But real quick, you can go through and look at the market in different areas and just see what's there. And again, add these charts, and now all of a sudden we've got this group. So that's a whole different way to look at it, and then you really quickly can get everything together in one place for you to analyze. Now, the other thing about home builders is obviously they need forestry, and lumber's been on fire this year. Lumber, it's gone through a couple of wild swings. So this was 440 to 1700, from 1700 to 440, up to 1300, and now back down to 440. Pretty wild. And just think about this, 1338 down to 440, whatever the unit of measurement is. Let's say it's 1,000 board feet or whatever. The bottom line is the price is currently sitting roughly 70% off the highs. And so, it's telling us something about lumber demand right now. And then if that was to start to spike back up, that would be a clue that things are getting different. So as we watch this, come into its base level around 470, and easy way to draw a line on here is just type in 470, and it's going to draw this line. So we've got this line sitting here, and that's not a bad place to look to get long. Let's say it doesn't go long. That would tell us another thing, right? All of a sudden the market's weaker than it's been in years, and we're going to have more problem with lumber. So that's another way of looking at it. And then we have forestry stocks. And you can do the same thing here. You can go in and check out different forestry companies. And so a lot of these are Canadian, but the idea behind the concept is still the same. You just want to go in and look and see what's happening in general. And so you can set it to year to date or whatever, 1 week at a time. But here's a company, GLT. I don't know anything about this company. And, it was an $18 stock. It's at $4. That's a pretty rough start to the year. And and then when we get in here, here's West Fraser Timber. Chart's been declining since middle of May 2021. There's a clue there that things were changing across these stocks. And when we go back to some of the other names, whatever, Weyerhaeuser, this chart made its high in May this year, but it's still pulling back and hasn't started to improve yet. So out of all of the charts we looked at, we don't have any that are improving. And if I was to just, grab Weyerhaeuser and draw some trend lines on here, until that started to break positive, breaking these big downtrends, I'm probably not interested in the stock. And the other thing we see right here, right now, is the PPO is just starting to roll over negative well below zero. And to me, that's a very intimidating place to own a stock, because typically when it's below zero, when momentum is negative and it's below zero, it can really accelerate lower faster. So to me, this is a very high risk place to start owning forestry stocks with the background I've shown you in housing, mortgage finance, everything's the industry isn't set up to go higher yet. And so obviously we could get into the whole bond yields thing and everything else to help check this out. But just in a quick half hour of going through the charts without doing any homework, do you really want to start going and investigating financial stocks or mortgage lenders and home builders from a financial perspective to start finding stocks to invest in? I would just say I don't think so. So with that, I'm going to leave it. Again, if you're interested in the presentation we're going to do on Tuesday the 20th, I'd like to invite you. We'll be sending out some blog articles about that coming up, and hopefully you'll get a chance to join us. It gives you a different opportunity to think about the markets differently, and hopefully it will help you. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks, everybody. Have a good week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.